What's up, guys? So this is how I lost about $46 trading forex on day one. Let's go to the chart. Let me show you that.
So here we are on the chart right now, and on the trade that I took, actually I saw it on the 4 hour time frame. Now as you can see on the 4 hour time frame, I have these equal lows here on this bullish order block. Now if you look at the upside right here, this thing is a premium array from the monthly chart, a fair value graph from the monthly chart. So we acted up from there and started selling. So we became bearish intraday on GBP USD. So market has been going down for the past since last week. Market has been going down. So this was also a favorable gap I saw on. I think this was yesterday or the day before yesterday. I think this is on Tuesday. Yeah, I saw on Tuesday on daily time frame. I actually took a trade here. Okay, so this is actually for today. I saw this bullish order block right here, and I was thinking that market is going to react off from here and start going back up, then come to this bearish order block, which is on the daily time frame. But I'm not going to switch to daily time frame. Okay, so I saw the liquidity here. I saw the bullish order block. I was thinking we are going to have a rally from this bullish order block to the upside because there is also a support. This black line right here is a support from the monthly time frame which I saw, but I won't be going over that right now. So I was thinking, okay, I think this is a valid bullish order block, but unfortunately it wasn't. So frame on the 15 minutes time frame, I saw this bullish order block. Now the reason why I picked this bullish order block is because of yesterday trading. We actually had a reversal at that bullish order block or the 4 hour bullish order block which I showed you in the previous slide. So this was that bullish order block on the 4 hour time frame. Okay. So yesterday being Wednesday 17th of May, we actually traded into it and we had a reversal intraday which made the price to start going to the upside. So I was thinking, okay, I think we've already bounced off from there, but today being Thursday, being 18th of May, when I woke up, I saw that London session is trading down to the is going to the downside. So I was anticipating a price move up from this bullish order block right here. I actually mark out this range, I but when London session has already closed, I decided to bring it down to this one for a New York reversal. So that was actually what happened on New York on today being Thursday, 17th, 18th of May. So I was anticipating the market to start rallying up from this bullish order block, 15 minutes bullish order block, but it didn't actually. So let me show you guys what actually happened. So I'll go down to the 5 minutes time frame. Now on the 5 minutes time frame, I saw this equal lows. Look at this equal lows right here. This clean lows. So I was like, okay, this is a perfect London reversal scenario. So I was just waiting for the price to take out the low, then give me a market structure shift to the upside, and I'll take the trade, which it did. Okay, this is the funny part. It did. It did it perfectly. Okay, but the only reason why it failed is because we are bearish. That's just the reason why it failed. So equal lows, liquidity sweep, market structure shift at this point, and there's a retracement. You see the funny part of it, there's a retracement. Look at this leg right here, this candle right here, there's a retracement. So when I saw the retracement, I was like, okay, I don't think this retracement is coming to this fair value gap right here. I don't think it's coming right there. Let me move this at the side. I was like, okay, I don't think it's coming down right here because of the volatility. There was the kind of volatility I saw in the market that made me to say, okay, it's not coming down here. So I decided to mark out this candle as the breaker. I mark out this candle as a breaker block. As you can see, it break down to the downside, rallying up, breaking the high. So this is a breaker block. Okay. So I was like, okay, this is a breaker block. So I'm going to take my entry right here. So I actually took an entry right here. And my stop loss was at the low of this candle right here. So I was anticipating to take out the equal highs that formed during London section. Sorry, the highs that formed during London session. So I was expecting price to take out that high, but unfortunately, there was a 30 minutes fair value gap right here. Let me go down to the 30 minutes. Okay, that was on 15 minutes. Sorry, there's a 15 minutes fair value gap right there. Oh, I think it's on the 1 hour. Let me just go down to the 1 hour. Oh, yeah, is it 30 minutes fair value gap? So this 30 minutes fair value gap right here, when I saw it, I was like, okay, since there's a 30 minutes fair value gap right there, I marked it out. So the moment I marked it out, price took it out first of all. But if you take a close look at these candles right here, look at this candle, look at the bodies of this candle. They are all closing within that fair value gap. None of them, if you go to the 15 minutes time frame, on the 15 minutes time frame, so none of them was actually surpassing the fair value gap that I saw. I think I marked that fair value gap on the 5 minutes time frame. So that was where I marked it out from. So none of them was actually going above. The body didn't close above it. So I was now waiting for maybe a little bit of reaction. Then we start moving up higher, but that didn't actually happen. Didn't happen. So we had a market structure shift to the downside. Let me go to the 1 minute time frame. This is that fair value gap. So we had a market structure shift to the downside and a liquidity sweep as well. So price swept out this liquidity, and all this is happening during the New York kill zone. So took out a buy side liquidity, rallied up, came back down and broke structure to the downside. You can use this one as well. I just mark this out so that the chart will be clear and neat. So break down to the downside. This is a fair value gap here. Reacted off on this fair value gap and started dropping. So I was still waiting for price to react off from here or any other place and start going up without knowing that it's actually coming to take my stops. So at this point, price came down and took out my stops. Okay. So assuming I actually took a profit at this point, I would have been in profit without loss, but that was actually too small for me. I think that was about it's not even up to 10 pips. So that was too small. So I had to hold the position. And I got taken out. So when I saw this move right here, I was like, wow, this is really energetic. So all I did was to go over to a DXY to actually analyze it more better. So when I went to the DXY, I found out that the PDRA for DXY is still above, like price has not yet traded to that point. Okay, it's still at the top, so we are still anticipating to get there. I marked this out from the daily time frame, so I'm not going to go over it on this video. I just want to make it short. So we I'm anticipating price to actually get to that point before I see any other reaction, but I don't think we are going to see any bearish movements in DXY this period. Okay, so that was what I now saw. I was like, okay, I think since we are bullish on DXY, we should be bearish on GBP USD, of course. So I went down to the 10 minutes time frame. Obviously 15 minutes. I went out to the 5 minutes time frame, sorry. So I was on the 5 minutes time frame when I saw that energetic move because I've already missed this one right here. I've missed it already. So I was on the 5 minutes time frame. Then I saw this fair value gap right here. And I marked it out. Now when I marked it out, price was still I think below here. Price was below here. So I was actually busy doing something else. The time I came back, market has already reacted off. I've already reacted off from here and start selling. So it was at this point again. So it was at this point again, and I didn't want to chase the trade, so I had to wait. So as I was patiently waiting, I was on the 1 minute time frame. This is the fair value gap from 5 minutes time frame. And this was where I told you price was. So as I was patiently waiting, I looked up here and I saw this fair value gap right here. I was like, okay, I think price is going to come to this point. So I marked that fair value gap right there. And once price came here, I took the sell. No, no, this is not where I took the sell. This is not where I took the sell. This look at the fair value gap that I marked out actually. It was this one. I marked out this fair value gap because I thought it's not going to come up to this side. So once price came back here on this candle right here, I went short. So this is where I went short. Now the moment I went short, my stop loss was actually above this high here. So I was waiting for the price to start trading down to the downside, and I'll be taking my profit at this point. Okay, at this there's a line I marked up here. I marked this line right here. So I was looking to take profit at this point. This line is actually coming from the weekly time frame. Okay, there's something I saw on the weekly time frame that made me to mark this low, this line right here. So as you can see, what price was actually doing, price was actually playing with my emotion right here. So it kept on consolidating, going higher, consolidating, consolidating. Let me move this to the side so that I can have a clear view.
It finally, as it was rallying up and down, it finally came back to this fair value gap right here. So it came back to this fair value gap right here, and it started selling. So at this point, I was already in profit. So market started going down and going down. Now remember this line which I marked out, which I told you I marked out from the weekly. As price came there immediately, we had a kind of a reversal. So I saw this fair value gap here. I was anticipating price to hit this fair value gap and keep on selling, but unfortunately, it started moving higher. And before then, I'm already at break even right here. I've already placed my stop loss right here, real tight, because this was my target point. So it's not really far from there. So that's why I actually placed my break even right here. So markets came back and took me out. So that was I actually lost $46 today, which is not bad. I think that's about it's not even up to a percent of my account. So that was about 20 something pips. Okay. It's not even up to a percent of my account. And yeah, so that's the trade breakdown for Euro USD that I took today, 18th of May 2023. I hope you find this video insightful, and I know some of you might have taken this trade too, and maybe they buy and they resulted to a loss, or they sell which resulted to profit. Okay, so this is actually the reason why the fair value gap here is the reason why we sold off, and this is what first entry. If you miss the first entry, this is second entry right here. Let me mark it out. Second entry right here, and so I hope you guys find this video insightful, and I wish you all good luck and good trading.